welcome, and we look forward to the presentation today. Let's get going into why we're really here. We're going to be talking about microloans today, and Mark Lichting is a microloan officer at UCED. They are an economic development corporation that specializes in microloans, and he's going to tell you all about them and all about how to go about getting a microloan from them or other organizations that do the same thing. So I'm going to stop sharing my slides and thank Mark for being with us today, and ask you to start sharing your slides and go for it.
Okay. Jane, thank you very much. Let's see if I can make this work. And
there we go. I see them.
It's getting there. All right.
There we go.
So good afternoon, everyone. Thank you very much for attending this this webinar, and thank you to Jane and Central Jersey SCORE chapter for inviting us to come in and present to you. And we're going to be talking about microloans. Let me give you a little background as to who UCEDC is. We have a couple of different names. One name is Union County Economic Development Corporation. A number of years ago, that, because it refers to Union County, it was thought that maybe people thought we were only Union County. We still get that, actually. So we have a secondary name, United Counties Economic Development Corporation. We try to not use any of the names. We try to just use the UCEDC. The organization started out in Elizabeth in 1977 by a group of local business people. They wanted to develop an economic organization to help the businesses specifically in Elizabeth. That quickly grew to the entire county. And then, perhaps 20 years ago, it grew to be a statewide organization serving all 21 counties in New Jersey. These days, in addition to serving New Jersey, we also lend into the 5 boroughs of New York, Westchester County, and also Philadelphia and Bucks counties in Pennsylvania. And, the services that we provide, we do lending, obviously. We do entrepreneurial training, and we also help businesses obtain government contracts. We have an entire department dedicated to that. And we are a designated community development finance institution, otherwise known as a CDFI. We're an SBA lender. That's what we lend, SBA programs. So we do have the microloan program, which is what we'll get into in detail in a moment. The other 2 programs that we offer are the Community Advantage 7A loan program and the 504 loan program. Very briefly, the Community Advantage program was created during the economic recession, when the government realized that commercial lenders, traditional lenders, had pretty much stopped lending entirely, and most particularly to smaller businesses looking for smaller loan amounts. So they created this Community Advantage 7A loan program. It's identical to the large 7A program that commercial lenders might do, but it's capped at $250,000. That's the program that we offer. We're among only about 40 lenders in the country that have that program. And then the other major program that we have is referred to as the 504 loan program. And essentially that allows a small business to purchase commercial property to house the business. It can only be used for that purpose or for a major equipment purchase. And essentially, it can allow this transaction to happen with as little as 10% down from the business owner. It's a fabulous program. It's very successful. And we do quite a number of 504 loans all throughout the state. But today we're talking about the microloan program. And to give you a little background as to who the microlenders are in the state, there are 4 of us. As you can see, UCEDC at the moment is the #1 lender in the state. This is a snapshot from the current loan volume report from the SBA for the New Jersey district. And this is the SBA's fiscal year runs from October 1st to September 30th. This is from October 1st through February 28th. So it's a recent report. And as you can see, UCEDC has 109 closed microloans. And then the other lenders in the state have far fewer. Let me talk briefly about the other lenders so you know who they are. #2 at the moment is CBAC, otherwise known as Cooperative Business Assistance Corporation. They are located in Camden, and they primarily serve the southern part of the state, the 6 counties in South Jersey. They traditionally are neck and neck with us. So it's a little unusual for them to be that far behind us at this point, but the year is not even half over yet, and I'm sure that they will come back quite a bit. Pursuit is actually an out-of-state organization. They do have a presence here, they have an office here, but Pursuit is the New York Business Assistance Corporation, NYBDC. And they operate in New York and New Jersey. I believe they operate in Connecticut as well. They're very big. But you'll see they've only done about 4 microloans this year. And I'll get back to that in just a second. RBAC, that stands for Regional Business Assistance Corporation. They're located outside of Trenton. They are also statewide. They are very similar in structure to UCEDC. They have the same loan programs as us, the 7A and the 504. But they and Pursuit have decided to focus primarily on the 504 and 7A loan programs, and very rarely at this point do microloans. UCEDC, the way we are structured, the way our Board of Trustees operates, they want us to be helping the really small businesses, and that's what we're doing. So that's one reason why we're so far ahead this year in microloans. So what's a microloan, rather a microlender? The way the microloan program works is we are effectively lending money that we borrowed from the SBA. The SBA lends us money that we then lend out to small businesses. Those businesses pay us back, and we have to pay back the SBA. Consequently, we underwrite the loan with the idea that ultimately we're going to have to pay those dollars back to the SBA. Now, a microloan, the maximum that's available is $50,000. That doesn't mean you can get $50,000 from us and $50,000 from RBAC and $50,000 from CBAC. It means cumulatively, in total, one borrower can only have $50,000 outstanding at any given time in microloans. A microlender is focused on businesses that can't get traditional financing. And I'm going to talk a little bit more about that in a little bit. Basically, it just means that if you can qualify for a loan somewhere else, a more traditional loan, then the SBA wants you to get that. The SBA dollars are supposed to be reserved for businesses that otherwise can't get funding. We will lend to startups. Most traditional lenders will not. They don't want to talk about it. They don't want to hear about it. If you're not in business at least 2 or 3 years, they will say, thank you for your interest. However, we're not in a position to lend. SBA microloans can go to a maximum of 7 years. That's something new this year. Previously, it was only 6 years. Now we can go up to 7. And the interest rates from UCEDC for microloans run from a low of 0%, literally no interest, to a maximum of 8.25%. Other lenders might have slightly different loan rates. The rates themselves are not set by the SBA, but there are limits as to what a lender can charge. And we've decided to go with this current rate structure. All right, you are probably a micro borrower. You are probably a business that is not going to qualify for traditional financing. You do need to be a for-profit business entity. The only exception to that rule is a nonprofit childcare business. You typically are looking for a small amount of money. Our average loan size is under $20,000, even though the loan program goes up to $50,000. And generally, a micro borrower is someone who hasn't been in business long enough to qualify for a traditional loan. It could be a home-based business. It could be that your credit is just a little short of what a bank would approve, but not so bad that we wouldn't be able to work with it. Or maybe you're just trying to establish business credit. Or maybe you need something more than what just a plain old lender would give you. One of the requirements of the microloan program is that we provide mentoring to all of our microloan borrowers. This is both before and after the loan. It is a requirement in the SBA Microloan program that we provide this service at no charge to our borrowers. SCORE, Small Business Development Centers, they are terrific organizations. They can help you if you are a startup and you're looking to create your business plan. They can help you think through this business idea that you might have. They can help you if you're having a problem in your existing business. They can provide a lot of services. Once you get a loan, certainly you're free to continue to work with SCORE or an SBDC, but we're going to be there as well because we are required to do that. We have a mentoring staff of about a half dozen, and some of the people actually have previously worked for SCORE or have worked for the small business development centers or who have been small business owners themselves. They're all very knowledgeable and accomplished, and they know what they're doing. So not everybody is eligible for a microloan. Who is not eligible? Someone who is a not-for-profit business, again, other than a childcare business. If you are a lender, if you lend money yourself, or if you are an actual insurance company, not a broker, not an insurance sales business, but an actual insurer, either of those are ineligible for an SBA microloan. We can't lend for what would be considered speculative type businesses. So buying and selling real estate, house flipping, investing in real estate, whether to resell or to keep as a rental. We can't lend for those purposes. Again, the 504 program that I mentioned earlier can allow your business to buy property to house your business, but your business generally has to occupy a minimum of 51% of the available floor space of that property. It can't be purchased for the sole purpose of getting rental income. If your business is outside our service area, obviously we can't lend, but there would be a micro lender in your service area that might be able to help you. We can't lend for pyramid or multi-level marketing type businesses. Mary Kay or some of the other types of businesses that require that you recruit other people to get involved. But we can't lend to that type of a business. Let me talk about franchises for just a moment. We lend to a lot of businesses that in fact are franchisees, but the franchise has to meet certain requirements as far as the SBA is concerned. If you were to go to SBA.gov, you would find the franchise registry. And in that registry, there's over 500 different franchises that are in fact registered with the SBA. Because it's registered doesn't necessarily mean that we can lend. The registration just means that the registration documents have been filed with the SBA, but the SBA has to approve the idea that the franchisor, the parent company, allows the franchisee company to operate independently, or at least independently enough so that it meets the SBA requirements. And I'll give you a perfect example. Subway, we all know Subway. They've been around for years. They're a tough business to lend to a Subway franchisee. One of the primary reasons is that the parent company, the way they structure the real estate, is that they require that they actually lease the property from the property owner, and then they in turn lease it back to the franchisee. In other words, they put themselves in between the property owner and the person who's actually operating the Subway franchise. SBA doesn't like that because that puts too many possible restrictions in the way the franchisee would operate his business. So in order to qualify for an SBA loan, the franchisor, parent company of Subway, would need to agree to a certain way of structuring that lease, or that lease back to the franchisee. So these are little things, little details that need to be worked out and that you would need to be aware of if your business idea is in fact being a franchisee of another company. Let's talk about businesses that are engaged in, quote, illegal activities. Obviously, if you're a loan shark, we're not going to lend to you. But what if you're looking to start a CBD business? That is potentially a problem. Now, that's the hot thing right now. Everybody, it seems like, is looking to start something that is selling cannabis oils. That's fine. It's legal in the state of New Jersey. It's legal federally to sell oils that are derived from hemp. The sticky part comes in, what are the other products that are being sold in the store? If the other products that are being sold in the store could have another purpose, such as being able to use marijuana-derived products, we can't lend because marijuana is still federally not allowed. It's federally illegal. So, something to also to keep in the back of your mind, even a business that may appear to be legal may not pass muster with the SBA. Any business that is promoting religion or religious beliefs, obviously we can't do. And then there's the thing called debarment, which is when a business owner or the business itself has caused a debt, an unpaid debt, or has not performed on a federal contract, they may be declared, quote, debarred and not allowed to get any additional lending that is derived from the SBA. Every application that we get before we go anywhere with it is we run the business tax ID number and the owner's social security numbers through a government database that we're required to use. to make sure that there's nothing lurking that's going to be a problem for us and the potential borrower. Now, it is possible that there are errors. That has happened. They can be corrected. But if it initially comes up that the potential borrower is debarred, that needs to be addressed long before any possible lending is completed.
Mark?
Yes.
Mark, we have a question from Dan, and he's wanting to know how the loan rates are established.
Okay. Simple question. Let me see if I can give a relatively simple answer. So when we borrow money from the SBA, we're paying interest on those funds. And the amount of interest that we pay back to the SBA determines what interest rate we can charge. Essentially, it's our cost of funds. And then we are allowed a certain level of additional interest rate that we can apply to that. But what we have decided to do is that maximum rate of 8.25%, that is below what we would legally be allowed to charge. So even though we might be able to go up to 10 or 11%, we've made the determination that 8.25% is the most that we would ever charge. Now, who would get 8.25%? That would typically be a startup business. A startup, which is a riskier proposition, is typically going to have a higher failure rate, and typically, consequently, is going to have more risk associated with it, and would therefore generate a higher interest rate. We do an entire analysis, taking in a lot of different factors, the years of experience of the owner, the industry itself, credit, previous credit information goes into the mix. So all of that goes into the mix to determine the startup interest rate for a startup business. Typically, a startup is going to be somewhere between 7 to 8.25%. I hope that answers your question.
Great, thank you.
So at a minimum, here's what we're looking for with an application. They do vary by the specific program, and we have sort of created a number of different variants of the microloan program, both for startup businesses and existing businesses. So the specific requirements are going to vary a little bit based on which program we're talking about, but here are some things that are mandatory. Any business, every owner that has at least a 10% interest in the business must fully participate in the loan. Now, if someone is an owner and has less than 10%, they may not have to participate in the loan, but we need to know about them. We're going to need to know who it is, social security number, their background, because of those regulations having to do with whether or not they are debarred. We're going to want to know the owner's resumes, who they are. We're going to look at credit reports. We're going to want a personal financial statement. We're going to want business and personal tax returns. And if it's a startup, here is one of the top things we need. And this comes right from the top in our organization. Our board of trustees requires that any startup business owner have industry-specific management experience. You want to start a restaurant? Great. Have you managed a restaurant previously? We are typically not going to lend to any business where the primary owner doesn't have prior experience in that type of business, or at least something that is easily transferable to the business they want to start. Again, for a startup business plan, that's the map. That's the information. We get a lot of information from a business plan. The business plan has got to make sense. And then projections. Any startup needs projections. And the thing about projections, and I'm sure Jane can talk about this at length, is they need to be realistic. They need to be understandable. You can't just say, I'm going to do $10,000 a month in, a month out. We're going to want to know how those projections were derived. And I mean, literally, you know, using the restaurant as an example, you tell us you're going to do 10,000 a month. You're going to be open X number of hours a day, X number of days a week. And we whittle that down to determine what you're saying effectively your average ticket price is going to be, how many times you're going to have to turn your tables, you know, all of that information. And if it doesn't really make sense, if it doesn't jive with the kind of business that you're starting, you know, those then are going to be projections that are not going to be believable. So again, why it's important to work with SCORE to make sure that the projections and the entire business plan really does make sense. So here's a little bit of a flow chart as to what we look at, particularly for a startup business. You know, what's the number one thing? Is it a viable business? Does it make sense? Does it make sense in the current economic climate? Is it a business that a reasonable person is going to believe is going to succeed? And then there is that experience factor. That is number two, right after whether or not it's viable. And then all of the other things that fall into place following those two primary items, they all come into play. They all get considered. I could go down through all of them, but I'm sure you're well aware of all of that. Let me talk about collateral for a second. We go back and forth internally about collateral. Collateral doesn't make a bad loan good. It doesn't make a loan that we otherwise don't want to do doable. It's just added protection to the lender. Typically, we can go up to $20,000, maybe even $25,000 with collateral. I'm sorry, without collateral. But for a startup business, for a risky startup business, we're probably going to not go up that high. We might only go to $15,000. So, you know, it's unfortunate that sometimes you need to have more wherewithal than you might otherwise think you need in order to be able to qualify for a business loan.
Mark?
Yes.
We have another question here about credit.
Okay.
What happens if the new small business owner had identity theft and the credit score was affected?
As long as it can be documented, not a problem. You know, if somebody stole your identity and you notified everybody, and because typically what'll happen, credit card companies will work with you and get it corrected. You know, they won't ding you for that. Any legitimate lender would do the same. But if your identity was stolen and you didn't do anything about it, there's not much we can do.
Thank you. Can the owner hire someone to provide, can an owner hire someone to provide the restaurant management expertise if?
That's touchy. Because what happens if that person leaves? That's a different, you know, that is done on a case-by-case basis. But it's a scary thing to a lender that, you know, the owner of the business has no prior experience and they're hiring people to provide the experience. You know, we would prefer that the owner have that prior experience. We sometimes tell people, you know, go out and work in a restaurant for a year and then come back. find out what the business is about. A no today doesn't necessarily mean a no forever.
Mhm.
So, we strongly recommend that people have experience in the industry that they're looking to start, because you don't know what you don't know. And you might be a savvy business person in general, but if you don't know the ins and outs of a particular industry, it's going to make it harder for you. And you're going to have to totally trust somebody else to make decisions for you.
Okay, thank you. Good answer.
So the deal killers, these are the ones where, they just get cut off. Quick no. Obviously, the debarment, defaults on prior government loans or contracts. A recent bankruptcy. We do lend to people who have had bankruptcies. Our guidelines are that the bankruptcy must be at least 5 years ago. And when I say 5 years ago, 5 years since it was discharged, not filed, but 5 years after it was settled. Do we bend that a little bit? Yes, we can. Have I done a loan for someone who was bankrupt 4 years ago? Yes, but it's a matter of how well an individual has reestablished credit. I've also not done loans for people who were, bankrupt 7 years ago, because now they're looking like they're about ready to file bankruptcy again. Again, the short answer is yes, but it will depend. Believe it or not, people come to us looking to borrow money, but they haven't filed taxes for the last 3 years. Can't help them. Not every owner wants to participate in the loan. Okay, that's understandable. Not everybody wants to be on the hook, and that's fine. Unfortunately, we can't lend. They all need to participate. Now this gets kind of touchy. We would like to be able to lend to anyone who, has immigrated here, and, we would like to be able to help, but to a certain extent, our hands are tied. There must be a US citizen, or at least documented. Someone with a green card, absolutely, we can help. Someone who's here on a work visa, we can help, but there are some limitations with that. We can't lend for a period of time longer than the end date of the current work visa. And the work visas typically are 2 years. Even though someone may have been here for 10 years with the work visa rolling over every 2 years, because of the possibility of them not being renewed, we can't lend for longer than the end date of that work visa. So I mentioned before some of the specialty loan programs that we have. This is the big one right now. It's our COVID recovery loan program. This is designed to help businesses that were in existence prior to COVID who have now made it through. They're either restarting or they managed to limp along during COVID. This has nothing to do with any of the other federal loans that were out there, the PPP or the EIDL loans. This is ours. It is an SBA microloan. It's a maximum of $15,000. It is 0% interest. It is a 5-year term. It is unsecured, meaning no collateral, but you do have to provide a personal guarantee, which, by the way, is mandatory on any SBA loan. The minimum credit score for this is 630. 630 won't get you 15,000. 630 would get you 10,000. You need a minimum 660 for 15,000. But it's quite a low FICO score. It's only available for New Jersey businesses. Can't do this in New York or Pennsylvania. And if you go to our website, ucedc.com, and you want to apply, you'll find the pre-qualification application posted on the website. And then these are two other of our primary microloan programs. These are both for existing businesses. First is the Rapid Response Program. Need to be in business at least a year, or pretty darn close to a year. It's a maximum of $10,000 over a 3-year term. We look for a certain amount of debt service coverage. What is that? If we look at your net profit after all expenses, there needs to be at least $1.10 of profitability of cash flow at the end of everything for every dollar of loan payment that you have to repay. So if a loan payment is $300 as an example, we'd be looking for a minimum debt service coverage of $330. We need to know that the business would be able to repay the debt. We're looking for a minimum credit score of 650. The interest rate on that is our highest rate. At 650, that's the highest rate of 8.25 because the business has only been around for a year. But if you're a minimum 700 credit score, then you would be at the prime, whatever the current prime rate is. And again, it's an unsecured loan, but with a personal guarantee. Now, the other big loan program is our Prime Lock, which, as the name indicates, it's the prime rate, which today is 3.25. By next week, it'll probably be 3.5. It's a maximum of $25,000. Business needs to be operating at least 3 years, a slightly higher debt service coverage, and a slightly higher minimum FICO score of at least 680. These are the loans that we typically do the most of, in addition to the COVID recovery loan. And there you have it. I'd be happy to take any other questions that are out there.
Okay, Mark, I misread or didn't get the whole read on that, the restaurant management expertise. So I'm going to go back to that. This one is, can the owner hire someone to provide restaurant management expertise if the main business is in entertainment, but food will be served on site?
Yes. Yes, you're saying you have a restaurant, a food service manager inside something that is primarily something else? Then sure. Yes,
yeah.
That's fine, because we would be lending to the main company, not to the food company, I presume. I mean, it depends on the structure of the business, but yeah, I mean, certainly that would make sense. Yes.
Okay, that was my misreading of that. And then another question, is there a waiver or grant to cover, I'm sorry, my thing is scrolling here. Is there a waiver or grant to cover origination fees and other charges associated with obtaining a microloan?
Okay, well, no, but there are no charges. So we do not have an application fee. We do not have a closing fee. The only fees are pass-throughs if and when we have to file liens for collateral. So what kind of liens would there be? One would be a universal commercial code, a UCC filing on a business. Now, the loans that I've talked about, the COVID loan and the Prime Lock and Rapid Response, those have no collateral needs, so no liens are filed. But a regular microloan, like for a startup, would require a UCC filing, and if I remember correctly, probably works out to be about $80 altogether. And then if we are taking real estate as collateral, we typically would file a lien on the real estate, and that varies by county. That's also typically about $80. So those would be the liens, and then any other fees. If you wanted to have your attorney review it or something like that, that certainly would be on you. That would be your own personal expense. But we don't have a whole bunch of fees associated with the microloan program.
That's great. Someone wants to know, can you get a loan if you filed your taxes, but those taxes still remain unpaid? Filed but didn't pay yet.
Not that you're delinquent with the taxes is what I mean, if you owe taxes that you haven't paid and the IRS has, fined you or whatever, no, if you owe back taxes, if that's what you're asking, if you owe back taxes and you don't have a payment plan or something like that, then no, we would not be able to lend. If you owe back taxes, but you do have a payment plan, we certainly would need to see it. We would need to know that you're current, but possibly we could lend. I think I understood the question, and if not, please ask it again or ask it a different way.
Okay. And then are there any microloans for someone looking to start an export business? And if not, do you know any types of loans that would be appropriate for an export?
We can lend for an export business. That there's nothing unusual about that. We have lent to businesses that export and import. So yeah, I mean that's it's going to depend. If it's a startup, it's going to depend on all of the things that we've already talked about so far. But yes, we can lend for that.
Okay, great. So we have just a couple of minutes. Does anybody have any more questions that they would like to put in the chat or the Q&A? That's all I have right now. I think your presentation was very thorough, and we want to thank you for that. It was very specific and very thorough, and I think everybody can see there is some help out there. So it's very encouraging that even startup businesses might be able to get some assistance to help them get off the ground and growing. So if there are no more questions, Mark put his contact information up there, so we will, so you'll have that. I would suggest, and I think you're okay with people just calling and chatting?
Not, we're still not back to the office, so
okay.
don't call.
Don't call.
Email.
Okay. Email and just check the waters, check to see if this is something that would work for you.
Right.
Someone asked about, will you get copies of the slides? Yes, you will. We will be sending those out within the next couple of days to everyone who participated. And I think that's a wrap. Mark, thank you again so much for your very, very clear presentation and for the work that you do. So many small businesses just need a little bit of help, and this is absolutely wonderful. I would suggest to people, if you're still trying to figure all this out, you could go to centraljersey.score.org and look for a mentor. We can help you get started with this and get your paperwork in order and so forth, and then refer you back to Mark for taking it to the next step. So let us help you. We'd be glad to do that. So thank you very much. And we'll be talking with Mark, I'm sure, down the road. And I thank you again.
Alrighty.
Have a great day, everybody.